How high will mortgage rates go in 2022? We're at 6% already, which is higher than I estimated at the beginning of the year, but we need to talk about the situation. Because this current situation provides the possibility of even higher rates. We are in unprecedented times. Let me explain. Now, first and foremost, rates are driven by the Federal Reserve. And right now, the Federal Reserve has no choice but to do quantitative tightening. They do quantitative tightening to reduce the size of their balance sheet, which has increased drastically because of the pandemic when they printed a ton of money. So in short, they have to reduce the supply of money by reducing the size of their balance sheet. And the way they do that is through quantitative tightening, in which they let treasuries and mortgage-backed securities roll off of their balance sheet. And if they need to reduce the size of their balance sheet even more in a hurry, they can actively sell those mortgage-backed securities. That's what they're doing right now at $95 billion every single month. This in itself provides a situation where interest rates on 30-year fixed mortgages can go skyrocketing because the Fed is no longer a buyer of those mortgage-backed securities. They're letting them roll off the balance sheet and they could potentially even start selling them. When they increase the supply of those mortgage-backed securities, the interest rates need to go up in order to attract buyers. And therefore, we can see 30-year fixed mortgages go much higher. We also have an inflation problem, and one way to tackle inflation is to crush the housing market. That is an option that the Federal Reserve can do, and asset prices right now in real estate have not dropped. That is one area that has not felt the impacts of the Federal Reserve just yet, but it can happen, and it's probably going to. Follow this channel for more content and let me know your opinions down below in the comments.